The governor says Florida's booming, but Cape Coral is burning. In just 24 months, home prices in this Gulf Coast paradise exploded by 83%. Families fought bidding wars for waterfront dreams. Retirees cashed out California equity and moved south for sunshine and freedom. By 2022, Cape Coral was America's hottest real estate market. Then it all collapsed. Values have plunged 11% in 12 months. More than half of all sellers are slashing their asking prices. And here's the part that should terrify you. 8% of homeowners in Cape Coral are now underwater on their mortgages. That's nearly triple the national average. The same people who bought paradise are now trapped in it. Moving vans that once carried furniture into brand new subdivisions are now carrying foreclosure signs out. The dream didn't fade slowly, it shattered. And the cracks started long before anyone was willing to admit it. Governor Ron DeSantis spent years promoting Florida as the ultimate success story. Low taxes, no lockdowns, endless opportunity. He called it the free state of Florida. But behind the PR campaign, something darker was building. Insurance companies were quietly fleeing the state. Property taxes were spiking. Hurricane risk was becoming uninsurable. And the people rushing into Cape Coral, they had no idea they were walking into a trap. But the governor's panic didn't start with falling prices. It started with something far more dangerous. Let's rewind to 2020. Cape Coral wasn't on anyone's radar. It was a sleepy waterfront city with modest homes and retiree communities. Median home prices hovered around $240,000 ISO dollars. Then the pandemic hit, and everything changed. Remote work turned geography into a choice. Suddenly, a New York accountant didn't need to freeze through February. A tech worker in San Francisco didn't need to pay $4,000 a month for a one-bedroom apartment. They could work from anywhere. And Florida said, "Come here." DeSantis opened the state early. No mask mandates, no capacity limits, no lockdowns. He framed it as freedom. And it worked. In 2021 alone, more than 330,000 people moved to Florida. It was the largest single-year population gain in state history. Cape Coral became the finish line for America's Great Migration. By the end of 2022, home prices had rocketed to $440,000. That's an 83% increase in 2 years. Buyers waived inspections. They offered cash over asking. They bought sight unseen. One realtor described it as a gold rush. Everyone wanted in. Nobody wanted to miss out. Here's a story that captures the madness. A retired couple from Ohio sold their Midwest home in 2020 for $240,000. They bought in Cape Coral that same year. 2 years later, they listed for $400,000 to $30,000. It sold in 4 days. They made $190,000 in profit. Then they tried to buy another home in the same neighborhood. They couldn't afford it. They won the game but lost their city. Governor DeSantis called it proof Florida was the new promised land. He was half right and completely wrong, because while prices soared, the foundation was rotting. Insurance companies weren't celebrating Florida's boom. They were running from it. Between 2020 and 2023, more than a dozen property insurers went insolvent or left the state entirely. The ones that stayed quadrupled their premiums. By 2023, the average Florida homeowner was paying $6,000 a year for insurance. That's 4 times the national average. Property taxes followed the same trajectory. Assessed values exploded, tax bills doubled, and homeowners who thought they were locking in paradise suddenly found themselves paying California prices in a state with no income tax protection. A Florida Atlantic University study released in early 2023 found that Cape Coral home prices were overvalued by 70%. 70%. That meant a $400,000 home was really worth $235,000. The data was screaming, but nobody was listening. The market was too loud. Then the dream started cracking from the inside. The crash didn't announce itself. It crept in through denial and desperation. Listings started sitting longer. Price cuts became routine. Sellers who expected bidding wars got silence. By early 2024, more than 55% of listings in Cape Coral had price reductions. The market wasn't cooling, it was freezing. Insurance wasn't just expensive, it became impossible to get. When a private insurer denied coverage, homeowners had one option: Citizens Property Insurance Corporation. It's Florida's state-backed insurer of last resort. In 2020, Citizens covered 420,000 policies statewide. By 2024, that number exploded to 1.4 million. Citizens wasn't just growing, it was becoming the entire market. Here's the problem. Citizens is backed by Florida taxpayers. If a major hurricane hits and claims exceed reserves, every policyholder in the state gets hit with an emergency assessment. That means even if you don't live in a flood zone, you're on the hook. The system is a financial ticking bomb, and everyone in Florida is strapped to it. The insurance crisis wasn't a side effect of the crash, it was the trigger, and the governor knew it 6 months before anyone else. Behind closed doors, DeSantis held emergency meetings with insurance executives in late 2023. The state offered bailouts, subsidies, and regulatory relief. None of it worked. Insurers didn't want more money, they wanted out. Florida's hurricane exposure was too high. The risk models were breaking, and the next big storm could collapse the entire system. The same governor who promised Florida was unstoppable now faces the collapse he ignored. In January 2024, DeSantis signed SB 2A, a sweeping insurance reform bill. It capped attorney fees, fast-tracked claim disputes, and created new incentives for insurers to stay. He called it a solution, but the data told a different story. Premiums kept rising, insurers kept leaving, and homeowners kept getting stuck with Citizens. Citizens now holds more than $500 billion in potential hurricane liability. That's more than double the state's annual budget. If a Category 4 or 5 storm makes landfall in a populated area, the system collapses, and every Florida homeowner pays the price. Then, Hurricane Erin appeared on the radar. In late August 2024, a tropical depression formed off the coast of Africa. Within 5 days, it strengthened into a Category 3 hurricane. Meteorologists tracked its path across the Atlantic. The cone of uncertainty pointed directly at southwest Florida. Cape Coral sat in the crosshairs. Here's a story that shows what panic looks like in real time. A young couple had been in contract to buy a $365,000 home in Cape Coral. 3 weeks from closing, financing approved, everything on track. Then their insurance quote came back, $11,400 per year. That was double their original estimate. The lender required proof of coverage, so they shopped around. Every insurer either denied them outright or quoted north of $10,000. Then the roof inspection came back. The home needed a new roof to qualify for coverage. That's another $25,000. The sellers refused to credit it. The deal collapsed. Their dream died in an email. By September, Hurricane Erin was upgraded to Category 4. Wind speeds hit 140 miles per hour. Evacuation orders were issued for coastal Florida. Gas stations ran dry, highways clogged, Cape Coral prepared for devastation. Florida built its fortune on sunshine. Now it's drowning in its own shadow. Erin didn't hit Florida, but the market collapsed anyway. At the last moment, a high-pressure system over the Gulf Coast pushed the hurricane north. It made landfall in the Florida Panhandle as a Category 2. Damage was severe, but Cape Coral was spared. The storm passed. The city breathed a sigh of relief. But the real estate market didn't recover. It got worse, because the hurricane was always a distraction. The real storm was already here. The near miss exposed the fragility of the entire system. Buyers who were on the fence walked away. Investors who planned to hold started selling. Lenders tightened their requirements. And insurance companies used Erin as justification to raise premiums again. By October 2024, the average insurance cost in Cape Coral hit $13,200 per year. That's more than most people's car payments. Homeowners were trapped in a brutal equation. They couldn't sell without taking a massive loss. But they couldn't afford to stay. Property taxes kept climbing based on inflated 2022 assessments. Insurance premiums kept rising, and home values kept falling. The dream had become a financial prison. One investor's story tells you everything. He bought 10 single-family homes in Cape Coral in early 2022. He financed them with adjustable-rate mortgages, betting on continued appreciation. By 2024, his portfolio was underwater by $320,000. His annual insurance bill alone was $80,000. He started selling at a loss. Every sale chipped away at his life savings. He bet on paradise. Paradise bet against him. Meanwhile, DeSantis continued pushing reforms. In March 2024, he announced a $150 million fund to incentivize insurers to write new policies in Florida. He called it a game changer. But the math didn't add up. Citizens was still adding 10,000 new policies every month. Private insurers weren't returning. They were consolidating exits. Here's what the data shows. In 2023, Florida represented just 8% of U.S. homeowners, but accounted for 79% of all homeowner insurance lawsuits. Insurers spent more on legal fees than they paid in actual claims. The system was broken at every level, and no single reform could fix it. By mid-2024, Cape Coral's home values had dropped 11% from their peak. That's a median loss of more than $40,000 per home. For the 8% of homeowners who were underwater, the situation was catastrophic. They owed more than their homes were worth. Selling meant writing a check to the bank just to walk away. Refinancing was impossible, and foreclosure loomed. The contagion didn't stop at Cape Coral. Nearby Fort Myers saw similar declines. Tampa, Sarasota, and Naples all recorded double-digit drops in sales volume. What started as a localized correction was spreading across southwest Florida, and the rest of the state was watching nervously. DeSantis pushed reforms, but the math doesn't add up, because Florida's real estate boom was built on 3 assumptions. 1, people would keep moving in. 2, insurance would remain available. 3, hurricanes would stay away. All 3 assumptions failed at once. Remote work trends started reversing. Companies called employees back to the office. The migration slowed. Insurance became either unaffordable or unavailable. And hurricanes? They're not going anywhere. Florida is projected to face increasing storm intensity due to warming Gulf waters. The risk isn't theoretical, it's actuarial. They called it the American dream. It turned into a Florida nightmare. The data doesn't lie, but it also doesn't tell the whole story. Cape Coral's crash is a warning sign for the rest of America. It shows what happens when speculation, climate risk, and policy failures collide. The people who lost everything weren't reckless gamblers. They were families chasing stability, retirees seeking warmth, young couples buying their first home. They believed in the promise, and the promise broke. Here's what we know today. Home values in Cape Coral have fallen 11% from their 2022 peak. That's a median loss of more than $40,000 per home. 8% of homeowners are underwater, the highest rate in the United States. More than 55% of active listings have price cuts, and insurance premiums have quadrupled in 3 years. Citizens Property Insurance now holds more than 1.4 million policies. That's more than triple its 2020 count. The state-backed insurer is carrying over $500 billion in potential hurricane exposure. That's more than double Florida's entire annual budget. If a major hurricane strikes a populated area, the system will collapse, and every Florida policyholder will be hit with emergency assessments. Governor DeSantis has signed multiple reform bills. He's allocated hundreds of millions in subsidies. He's capped attorney fees and streamlined claims. But none of it has reversed the exodus of private insurers. None of it has stopped premiums from rising. And none of it has restored confidence in the market. The reality is simple. Florida's real estate boom was built on unsustainable assumptions. It assumed endless migration. It assumed manageable risk. It assumed the party would never end. But climate science, insurance actuaries, and market fundamentals all said the same thing. This can't last. Cape Coral is the canary in the coal mine. What happened there is spreading to Fort Myers, Naples, Tampa, and beyond. And it's not just a Florida problem. Coastal markets across the country are facing similar pressures: rising insurance costs, increasing climate risk, overvalued properties. The Cape Coral crash is a preview of what's coming. The next hurricane won't just destroy homes, it'll bankrupt the system. So here's the real question. Can Florida survive what it created? Subscribe so you don't miss the next shocking chapter.